global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning. How are you?
Always a pleasure. All right, let's take a look at the crypto markets right now. Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently at $41,711. Bitcoin is slightly up, about 2.3% over the past 24 hours. The CoinDesk Ether price ETX index is at 3,113. Also, ETH is having a bit of a bounce, almost 3% over the past 24 hours. The new DFX CoinDesk DeFi index at 413 points. DeFi is slightly down now, about 0.2%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So looking at our top story for the day, everyone is focused on Fed Chair Jerome Powell heading to Capitol Hill for a confirmation hearing that could potentially shed light on his views on inflation, rate hikes, and more. Emily, what are you watching out for?
Yeah, so there's a bit of controversy here in terms of how much the Fed is actually affecting crypto prices, but there definitely is a popular narrative that Bitcoin's recent, or not just Bitcoin, the crypto market's recent crash is related to this idea that the Fed is going to tighten and also raise interest rates. So I think the crypto community will be watching this hearing with some interest, looking at any talk of inflation, of interest rates, or even potentially of a central bank digital currency, which could come up, although we don't know if it will.
Yeah, a lot of crypto Twitter making comments in terms of what the market will do. Yeah, Lawrence, calm before the storm. Not much movement just yet.
Yeah, I don't think we're going to see anything when it comes to today. I think we're really waiting for, and the reason why you're seeing prices bat around sort of, but relatively flat over the past few days is basically we're waiting to see what happens with inflation, because inflation is ultimately going to tell us where things are going to go in terms of how quickly we'll taper, how quickly even the Fed decides to unload some of what's on its balance sheet. It's really the inflation number is probably the big thing everyone's looking at right now. And I'm saying this as somebody who doesn't think that macroeconomics things have an effect on crypto prices. At least in the near term, but nonetheless, it's for the time being. People are just looking for any catalyst, and that's what they're focusing on at the moment.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, another news. Kevin O'Leary-backed DeFi platform WonderFi is purchasing BitBuy for $162 million in cash and shares. The deal adds 375,000 registered users to WonderFi, one of Canada's fastest growing crypto platforms. Joining us now with more is Mr. Wonderful himself, Kevin O'Leary, co-host of Shark Tank. Welcome, Kevin, to the show. So you've recently said that the NFT market will surpass Bitcoin. I wanted you to touch upon that. And since you're in DeFi, do you think DeFi will be bigger than NFTs?
Those are multiple questions, but let's go to NFTs first. NFTs have just started, their move into real markets. And I'm going to suggest in 2022 will be the year of the NFT for this reason. Physical assets, and the one I always use as a use case, are collectible watches. I have a massive watch collection. And so the used watch collection, the secondary market, is 10x the size of the new issuance each year. It's a multi-billion-dollar market. And it suffers from some really big problems. One is authentication. There's so many fake watches because watches have appreciated so much in the last few years. Number two, insurance premiums are very heavy, so you only want to be insuring the watches that are outside of your vault. So let's say I take 10 out of my vault and the rest are sitting under the streets of Zurich or wherever they are in whatever city. With NFTs, I could let the insurance companies bid on the ones that are outside of the vault, and I would save hundreds of thousands of dollars in insurance. And the other aspect of this that's so interesting is so many are one-of-a-kind watches that collectors actually own that people like me want to collect those dials that I can never own because there was only one piece made. And these are massive markets, and yet there hasn't been a standardization yet. When you scan a watch at the micron level of the dial. That's how you imprint its fingerprint into the NFT. And then you never have to worry about authenticating it again. You simply rescan it with your phone, and you can find out if it's the original watch or not, and it's not fraudulent. So that market alone is multi-billion, and there's so many other use cases, such as jewelry and pens and cars and real estate, that we haven't yet seen emerge. But it's all coming. And that's why I think NFTs at the end of the day will be a very, very large, liquid, transparent, and functional market. What drives these uses is economic value. And we're going to get a lot of that from NFT contracts, smart contracts, and ways that we can be transparent about assets that we own physically. That's why I say I'm extremely optimistic for that market.
Well, you say that
Kevin,
NFTs will be bigger than Bitcoin, but since you're in DeFi, do you think DeFi will be even bigger than NFTs?
I think DeFi, I think centralized platforms, I think cryptocurrencies, all of it is going to continue to grow in 2022. I know we have volatility. We obviously had a very rough opening for crypto this year, but that's nothing new. And I always tell people, look, if you have to make a binary decision. If you want to invest in crypto, you should have a broad portfolio. And because just buying Ethereum and Bitcoin today is not giving you enough infrastructure exposure. One of the reasons I invested in WonderFi was that they're getting into the exchange business. And you've got to think beyond our own domestic market when you're an investor. The regulators in different countries like Switzerland, like Canada, like England, Australia, the United Arab Emirates are all at different progressive pace in terms of how they're adopting cryptocurrencies. So you've got to invest globally because we are being very cautious in the U.S., and that's a good thing, I agree. But at the same time, if I want to have a stake in what's going on globally, I've got to invest in other jurisdictions. Canada was the first, for example, to bring out the Bitcoin ETF, the Ethereum ETF. That's a very progressive regulator there, and that's good. And so that's why I've made an extra allocation to WonderFi, because they're growing in that market in a huge way. And I'm not betting the farm on centralized or decentralized. I'm betting it on both. In addition to 32 positions like Solana, like HBAR, like Polygon, and Ethereum, and Bitcoin, I'm in the camp that because of the economic value of cryptocurrencies, this is a real sector. I've often called it the 12th sector of the S&P. It hasn't been named that yet. Our own domestic regulator starts to apply policy, you're going to see massive amounts of institutional capital come into this because economic value, productive value, reducing cost, enhancing transparency, payment systems, store of value. It's all there in crypto. It just takes time to get the regulator on board, and we all want that to happen. Sooner the better.
So, Kevin, let's look out 5 to 10 years from now, and let's look at DeFi. How do you think it will change? Will it continue being a marketplace that just for leveraging crypto, or will it be used in real world assets like NFTs that represent, for instance, some physical asset out there? Or do you think it will just still remain, relatively speaking, for buying and selling it, for leveraging those buys and sells of crypto itself, the leverage trades?
I think all of the above is the answer. The problem with decentralized finance currently, and one of the big problems that WonderFi is solving, is it's really hard to use. And so the average consumer that wants to use it can't. It's incredibly difficult to actually work with these decentralized wallets and understand the security and the transparency and all the things you have to do to get it right. And so the real opportunity for, let's call it Web 2.0, Web 3.0, whatever you want to call it, is to make it something that's very easy to use, that's very transparent, that provides the tax reporting and the regulatory forms that you need, no matter what your geography is. And then you can get into the business of staking or whatever else you want to do with it, payment systems. But right now, we're so nascent. I would say we're in the first inning of the potential of just decentralized finance. Because if you're my 25-year-old son or my 27-year-old daughter who want to use it just so they can stake stablecoin, it's virtually impossible because they're worried about paying their taxes correctly. We know the regulator is going to force that on us this year, this calendar year, and yet so few of the platforms provide that reporting yet. There's a lot of work to be done, but that in itself is the opportunity. This is an unprecedented year, both last year and this year, in venture capital going into decentralized finance. Billions of dollars are being invested. The smartest hands over the keyboard now are in crypto. All of those developers are trying to solve these problems. And if you're an investor like I am, you want to have a stake in this because it's one of the fastest growing markets. And I've chosen to do it in a very diversified way. Multiple equities, multiple tokens, multiple coins, multiple blockchains. I own so many of them now. Obviously, I'm using platforms like Circle for staking my USDC and FTX, and I have to disclose I'm a paid spokesperson and a shareholder in FTX, but I use it because it's institutional grade compliance for me. And I have to tell you this because it wasn't easy. It took me 6 months to convince my own internal compliance and my external auditors to let me do what I've done so far. And that's how long it's going to take institutions. It's birthing pains. It's really, really going to take time. And that's why we need policy and we need infrastructure for compliance, because the real potential for crypto is not just in individuals. It's institutional capital you need to attract to it.
Kevin, you raise a really important point about DeFi, which is that it is quite hard to use. And, a lot of these DeFi projects, at least in their early stages, you're kind of investing in an idea or a vision. And it's really hard to know exactly how to use it or how it's going to play out. So I'd be really curious to hear your perspective as an investor, and especially, with your experience on Shark Tank, right? Which in some ways is similar in that you have these sort of people coming with, basically an idea or a very early stage. Like, how do you take that experience and that skill and apply it to DeFi, which is very mysterious for a lot of people, right? You're looking at these really early stage projects, no history, no idea if they're going to work. Could you just give some tips for investors on like what you would look at in an early stage DeFi project that might suggest it will succeed?
The best way to look at this, all of this, including whether you invest in blockchain, whether you invest in Bitcoin or any other token or coin or NFT, whatever. If you're willing to invest in Microsoft and Google, what are you investing in? You're investing in software. It's basically productivity software. Bitcoin is not a coin. There's no physical coin. It's simply software. So you're betting on the fact that many other people will use this software as a store of value or as a currency. When you invest in Ethereum, you're investing in software. Polygon is trying to take the gas fees down by aggregating transactions and putting them through at 100,000 at a time or more. That's productivity software. HBAR being used by Boeing and other corporate entities. It's software. So if you're willing to invest in Microsoft and Google, why wouldn't you invest in Ethereum? Or why wouldn't you invest in HBAR or Polygon or Solana? Why not? It's all software. And so what you need is diversification. I don't know which of these platforms is going to win. That's why I own them all. And that's how I used to invest in software back in the learning company days when we did educational software and math and reading test scores. I would bet on the best development teams, and I would buy them, and I'd aggregate them, and I'd provide them distribution. This is no different than what I'm doing today. I've been doing this for 25 years. I invest in software teams. So I'm very fortunate when I want to meet the Polygon people. I was able to do that in Dubai just a few weeks ago, and I made an investment there. You meet the team, you assess their capabilities, and you bet on those individuals. These are really smart programmers, really smart engineers. They've moved into crypto because it's cutting edge, it's growth, it has unlimited potential. You want to be there right beside them, and you want to invest in them.
Kevin, quickly, are there any DeFi projects that you think are still under the radar? Last year was very much the year of Solana and Polygon. They kind of blew up. Anything that you're looking at that you think could really explode in 2022?
I think we have to work on the wallets. The whole decentralized wallet structure is archaic compared to what it could be. There hasn't been enough money invested in making wallets much easier to work with. I find them just archaic. And we're going to have to solve that problem if we want wide adoption of decentralized finance. That's one of the mandates that WonderFi has. They've done a great job there. And they've also diversified their risk. For me as a shareholder, I'm very happy with their last move to buy BitBuy because when you're dealing with cryptocurrencies and you own an exchange, you don't care if the price is going up or down. In fact, volatility is your friend. I want to own infrastructure, and I'm very happy with their moves to aggregate accounts. Starting with 375,000, that's the largest exchange in Canada. They can just build on that. So it's terrific. And now I'm less agnostic. I'm less concerned about the price of Bitcoin for that particular equity holding. The more volatility, the better it is for WonderFi. They're not tied to the price of Bitcoin. In fact, they don't care.
Speaking of WonderFi, is this marketplace only for Canadian customers, or since it's DeFi, can anyone join?
You know, there are rules in each of your own geographies. So you can open accounts, but you have to abide by the rules in your own jurisdiction. And this is why there's so much geo-locking going on all these platforms. You have to know your customer. You have to abide by the regulator. The Canadian regulator has the first order ever granted was to BitBuy. It was the first market order for an exchange in addition to a dealer as well. So you're able to have the accounts and use the exchange to discover pricing. And yet everybody that signs up there has to abide by whatever rules their jurisdiction has. And this is going to be the standard globally. So really, when you start to think about it as an investor, you want to find geographies or jurisdictions where the policymakers are advanced on crypto. Not all countries are the same, but I mentioned a few that are very advanced. Certainly, what's happening in England, what's happening in Switzerland, what's happening in Canada, what's happening in the United Arab Emirates, they're all interesting. And what that means for me as an investor is I'm on an airplane a lot because I'm going to these jurisdictions to find out where I can invest in their platforms because I'm investing in the long-term future of a global enterprise. I really believe in the next 5 years, maybe it'll be 7, but probably 5, cryptocurrencies and crypto blockchains and all the derivatives of level 2 chains, et cetera, will become a sector in the S&P. It's so productive what it can do for global financial services, which is the largest market in the world. Just the currency market is a multi-trillion-dollar market. And we can do so much great things with decentralized finance to make it more transparent, better contracts, much less expensive, and it's all coming. And that's why you've got to pick you have to decide where you're going to place your bets. And I like diversification. So I place many, many bets.
Kevin, are we going to see crypto projects pitching on Shark Tank anytime soon?
You know, the challenge, it goes right back to how we started our conversation. For the average consumer, it's so complicated. Our industry has to solve this problem. We'll start to see crypto deals when you can explain them in 8 minutes on Shark Tank. Until then, I don't think so. It's much easier to explain wicked good cupcakes than decentralized finance.
You know, just talking about DeFi and WonderFi, you know, DeFi Pulse saying that the total lock value in DeFi right now is over $90 billion. And you're talking about regulation. There's a lot of talk among governments now about how to regulate decentralized finance. But I wonder, there's some who argue you can't regulate decentralized finance, that DeFi platforms can't become brokers. You don't get information that way. So I wonder, how do you see DeFi being regulated globally?
It's a great question, and it's certainly being debated within the crypto community. But let's start with things that we can regulate. What I would like to see done in 2022, and I am hopeful, is to get policy on stablecoin. Stablecoin for many institutions in my operating company, and I'll give you a dilemma. This is a simple use case that billions of dollars are being applied to. I sold down our portfolio of commercial real estate. It generated a lot of cash. I went to my cash desk and said, I have not anything to deploy this cash into. I want to park it for a while I put it back into the market over time. I like to average in. What can I get in interest? They offered me 20 basis points. Inflation is currently 5.5% to 6%. So basically, I'm being taxed at over 5% on my cash. I'm losing buying power. Now, to solve that problem is where I really started to focus on stablecoin. I can stake in 30-day, 60-day, 90-day contracts for between 4.5% to 6%. So at least I'm holding my edge against inflation. Now, to get that set up, we don't yet have policy. So within my own compliance department, they do not consider stablecoins cash. They consider it equity, with equity-like risk. That's not exactly correct. So I can't really use it to hold anything more than 5% right now. I really need the regulator to make policy on stablecoin. And I understand the issue around XRP and some of the litigation that's occurred that has held back advancing this policy, I think, and it's got to get resolved. But at the same time, I really want the regulator to make a decision on this so that I can apply more of my assets into staking, particularly when I have cash excesses, into stablecoin, at least hold my inflation off. I mean, that's the whole key.
No. So, Kevin, speaking of stablecoins, one of your co-hosts got completely wrecked investing in one algorithmic stablecoin, Iron Finance. And have you given him any help, any advice? I mean, giving him any guidance on what to do next? I mean, did you loan him some money to make up for the losses? What's going on there? What would you say for him going forward when it comes to stuff like that?
He doesn't need any money. I mean, what I would tell everybody about this is you must diversify. Think about mandates. I do a lot of work with sovereign and pension plans in the indexing business that I'm a partner in. And here's a typical mandate. Let's say you're running a $5 billion fund. You're not allowed to put more than 5% into any one stock or more than 20% in any one sector. Why not manage your crypto the same way? My largest holding today is Ethereum. Right under that is Bitcoin. But they don't represent more than 5% weighting in the aggregate portfolio. In our operating company today, I thought I'd end last year at 7%. Because of the appreciation of crypto, I ended up at 10.7. So in my world, I can go all the way to 20% in crypto, and within that subset, no position will be larger than 5%. That is a very sound mandate of diversification. You will get the rise of crypto. Not all will be equal. With some of my positions I'm down on, some I'm up on, but there's a lot of volatility. But in aggregate, I've got diversification. I'm not going to get wrecked if one 5% position goes to zero. And I don't play the meme coins. I don't do that stuff. I'm looking for real productivity. I'm saying, what does Polygon do that would make me want to invest in it? It aggregates transactions. It reduces gas fees. It's more transparent. It's faster. That all makes sense to me, so I allocate to it. Same with HBAR, same with Solana, same with Ethereum. They're all software. I've said that countless times because it's true. Get in your head you're investing in software productivity and you'll make your crypto investing a lot easier. Bitcoin is not a coin. It's software.
All right. Thank you very much, Kevin. Looking forward to that day when crypto companies show up on Shark Tank. Thanks for joining us today. That was Kevin O'Leary, co-host of Shark Tank and billionaire backer of WonderFi. Coming up, a crypto markets update with crypto hedge fund Pantera Capital.
What's up, everybody? This is Spencer Dinwiddie.
And I'm Solo Cisse.
And this is New Money, brought to you by CoinDesk.
All I hear, go get the money. So I go get it. Hate means I do something right. So I'ma let him. Yeah, I'ma let him. Yeah, I'ma let him. I hit the nail on the head. Yeah, I'ma let him.
What we'll see is money not only being exchanged for this digital currency, but the frictionless movement across borders. It's gonna be able to flow as easy as a text message.
Staying true to yourself, right? Like, you've always been true to yourself.
I just want to share that with everybody. You could be yourself in full capacity.
It's our duty to take our visions and be fearless in our pursuit.
Be my most authentic self and show people that, look, I'm an athlete, and yes, I'm also a part of the LGBT community.
My goal is to have, my own NFT, my own entire IP, like my own everything.
How do you think, blockchain and crypto impacts the way you think about it?
I think everyone has like some sort of like, so like, how'd you get into Bitcoin? It's like asking someone if they smoke. It's like, yo.
Embracing where the world is going. And when the whole world shut down, we saw just how important tech was.
It was more so of my style and the foods that I cooked that kind of pushed me. I wanted to live the lifestyle of an athlete or an artist while doing what I love.
Having that open mind, having that flexibility just allows you to be of so much more service to, youth or society in general.
Gamers, maybe it's because you guys just hustle different.
Anything you want to be great at, you got to put hours and hours in every single day.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. Time for a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently at $41,502. Bitcoin is sliding up over 4% over the past 24 hours. The CoinDesk Ether price ETX index is at $3,109. ETH is also making an advance of almost 3%. The DFX CoinDesk DeFi index is at 412. It is taking a step back about 0.4%. Joining us now to discuss the crypto markets is Paul Veradittakit, partner at Pantera Capital. Hello there, Paul. Thanks for joining us. So, taking a look at the crypto markets, mixed results right now. What is your strategy when navigating these markets?
Yeah, so I mean, obviously the crypto markets are down right now. For us, I mean, we are long-term holders. For us, we believe that there may be catalysts on the macro side that push Bitcoin price or cryptocurrencies up, especially if there's anything related to inflation. But at the end of the day, I mean, we're looking at this, similar to what Cameron mentioned, I mean, we're looking at this as technology, and we're looking at this as asset diversification. From what we've seen with our investor base, 2 or 3 years ago, it was 75% retail and 25% institutional. Now, as we are raising new funds, we're seeing that our investor base is 75% institutional and 25% retail. So we're really starting to see institutional capital, see cryptocurrencies as an asset class that needs to be part of their portfolio. And of course, there's some more, sort of tech savvy investors that look at this and really see the potential for faster, cheaper payments, for disruption of Web 2.0, for building new decentralized applications that can disrupt legacy incumbents. And so for us, we just take a long-term view, and we continue to be fully exposed to the market right now. And, we just had more capital come into our funds, and you guys may have seen that we had more inflows coming into Bitcoin. We had more inflows coming into our funds that are providing diversification across both the liquid and private markets. And so investors right now are seeing this as investors in our funds are seeing this as a healthy correction, seeing this as a buying opportunity. And for us, we're buying into it. We're continuing to invest into liquid markets right now.
Paul, point well taken about the long-term view, but I'm just curious, what is your explanation for what's going on right now in the markets? I mean, 2022 is off to a pretty rough start. As always, there are many different theories out there. What's yours?
Our theory right now is that it's a healthy correction. We're going to see pullbacks like this happen along the way. I think what's different between now and let's just say 2018, when we had a much larger drawdown, is we are seeing more permanent capital that has come into the space within the last year or so. And so with that permanent capital means a couple of different things. I mean, probably means a bit more correlation with the traditional markets, a little bit more, but also it just means that when markets get a bit overheated, we're going to see pullbacks like this, but we won't see the same sort of drawdowns that we saw in 2018, 2019. So we see it as being very, very healthy. And, we feel that Bitcoin and Ethereum have hit rock bottom, and it'll slowly grind back up. And what will help it grind up even faster will be, whether it's a little bit of help from the macro perspective, or whether it's more use cases that really kind of push cryptocurrencies out there to be used by retail and institutions. And that could be both from a financial DeFi perspective, centralized finance perspective, or it could be from other sorts of use cases around decentralized applications.
So, Paul, first of all, hello. You had a piece in CoinDesk recently, kind of a look ahead. And one of the things you did also was to look back at 2021 and see some of your predictions and whether or not they turned out. One prediction that didn't turn out for you the way you thought it would be is digitizing real world assets. Why do you think that didn't happen in 2021? What would make it happen in 2022, 23, 24? And where's the opportunity in that space?
Yeah, that's a great question. I mean, I think there's still a lot of opportunity in digitizing real world assets. It just takes a bit longer. It takes longer to work with, bridging traditional finance and DeFi, or whether it's really, trying to figure out how to bring, things like, physical assets onto the blockchain and making sure that you can sort of tie them together in a way that provides security, in a way that provides transparency. So when you're working with real world assets, it's just a process. And for us, what we saw was there was just other things that took a bit more priority. NFTs had a huge year. Scalability had a huge year. DAOs had a huge year. So it's just going to take a little bit longer for that to happen. I think both education kind of goes into it. And so as we see other use cases around those things that I mentioned, plus yield, that really kind of, spurred as a huge use case, especially during a pandemic where, you go to my bank account, I'm getting 20, 30 basis points for my cash. I could rather put it into stable coins and get 4 to 6%. All of these other use cases, and the fact that like now there's decentralized exchanges and all of these use cases are bringing cryptocurrencies and tokenization to the forefront. And I think once you get more education and once you get better user experiences and all of that, then there's going to be an opportunity to onboard more and more real world assets onto these platforms. And then, I think people will be, sort of more susceptible to actually use these things.
So 2022, you're going to see, you foresee a rise in both level 1s and level 2s. So which do you think is going to be the bigger growth?
Yeah, I think layer 2s are really going to go this year. I really do think that, we've seen a lot of activity going on with Polygon, and we also are seeing, we're seed investors in Arbitrum, which is using optimistic rollups, which is another strategy around rolling up transactions and making them faster and cheaper. We've also are seed investors in Starkware, and they do ZK rollups, which is another strategy around scalability. So with a lot of the still a lot of the applications targeting Ethereum as their base layer technology to build on top of, and most of the NFT activity actually being on Ethereum right now, and you talk about how big the NFT space is going to be, really feel like layer 2s, as more and more of them hit the market, and we see about 4 or 5 of them really having a chance to sort of win that particular space. I really feel like layer 2s are really going to explode this year, probably even maybe more so than some of the layer 1s out there. But layer 1s are also going to do very well. I mean, we're seeing a lot of capital flow into layer 1s. Like other investors have mentioned, it makes sense to have diversification in the space. It's still very early to sort of see who's going to win that space. You have Solana breaking out last year because of immediate low transaction costs, but you're seeing Near, you're seeing Avalanche, you're seeing Terra Luna, you're seeing these layer 1s have ecosystem funds between $300 to $800 million, and that capital is going to flow into pushing more development on top of their platforms, which means more usage of the base layer currency, which means those token prices are going to go up. So for us, I mean, we see a lot of growth both in layer 2s and layer 1s, but I actually think layer 2s are probably going to have a banner year.
All right, Paul. Finally, big hearing today with Fed Chair Jerome Powell and his confirmation hearing. What are you watching out for, and how do you see that impacting the crypto markets, if at all?
Yeah, I do think that it might have some impact on the crypto market. I mean, I'm looking for anything regarding to do with inflation. I mean, I'll go back to exactly what you guys mentioned earlier. I mean, anything to do with inflation, anything to do with any sort of policy around that will be huge. So that's what I'm looking out for.
All right, Paul. Thanks for your insights. That was Pantera Capital partner Paul Veradittakit. All right. Coming up, checking in with CoinDesk Global Policy Regulation Managing Editor Nick Day.
Hi everyone, my name is Naomi Brockwell, creator of NBTV and co-host of The Hash, and you are watching CoinDesk TV.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So CoinDesk has a huge article out, the Mnuchin Files. New documents shed light on Trump-era crypto policy. And I understand that you folks filed a FOIA, Freedom of Information Act, to get this data. Tell us some of the highlights.
Yeah, good morning. This was a pretty massive undertaking by CoinDesk. It had 8 different people involved in just kind of the creation of the article itself. But basically, we FOIA'd former Treasury Secretary Steven Mnuchin's crypto-related emails and got 250 pages of documents that said everything from former President Trump's son-in-law Jared Kushner was an early advocate of central bank digital currencies to the Treasury Department, to the fact that the government of Ukraine once reached out asking for help with sanctions concerns because the U.S. government issued sanctions against Crimea, a region in Ukraine, but crypto exchanges were pulling out of the entire country as a result. So there's really a lot of eye-opening details in this report, and obviously I should plug it, but definitely do recommend reading it because it took 6 of us to put it together and go through just all the insanity. And Lawrence, of course, was one of the other reporters on this.
I just literally put one sentence in. It was really the 5 of you. I just kind of showed up at the very end. That was useless. But the real thing, I mean, like stepping back for a second, what was your big impression? We all went through this document together, and went behind and fact checked and what have you. What was the big takeaway that you came with? And I'll tell you mine. But what was yours?
I think to me, it's the, this idea that we've had this impression that the, Trump administration was relatively, light touch on crypto. And to me, these emails kind of maybe cement that because there were a lot of emails where you had people, either requesting to speak with someone at the Treasury Department or specifically with Steven Mnuchin, or you had, people asking for help from the Treasury Department, such as, I mentioned the government of Ukraine. And a lot of these emails, we got internal records where staffers were saying, we don't think that this person needs to be able to speak with someone at Treasury, or, let's throw this to, such and such deputy, or there just wasn't a response to begin with. So, that was, I think, really interesting to me in that, we got a bit of a look at some of the internal deliberations from the Treasury Department officials who were looking at these emails, fielding these emails and saying, I don't think we need to respond here.
Nonetheless, I actually came away with a little bit of an interpretation, which was they were kind of more active than we thought they were. There was that March 2020 meeting, which ultimately I think didn't really happen, but it was going to have a whole summit of a bunch of people. And Jack Dorsey, except Jack Dorsey couldn't bring a +1, right? I mean, there were, it was Coinbase, Chapo, obviously Square, and Fidelity, Chainalysis, and they were going to do this big summit. Ultimately, it ended up being, instead of an email, the phone call, I guess. But it did seem that they were kind of more active than at least was reported, right?
Yeah, I don't mean to suggest that they weren't active, just more that it was interesting to me just kind of how they approached it, right? Clearly, they were thinking about this, and we even had a couple of emails around the FinCEN wallet rule that was proposed at the last minute, but it had been kind of hinted at for months and months, and this is one of the emails where multiple members of the blockchain association and other groups tried to reach out, and they either didn't get a response, or the response was, we can throw this to someone else.
Yeah, there were a lot of these little anecdotes and stories that, and it's in the article, all these little interesting tidbits. For instance, there was a personal relationship between Steve Mnuchin and Alicia Haas from the CFO of Coinbase, where they knew each other from working together before on Wall Street, and that helped, let's say, facilitate meetings, et cetera. And there was also one other funny incident where somebody pitched Steve Mnuchin right away.
Yeah, that was, I mean, the sheer courage, maybe?
Chutzpah,
I don't know if that's the right word. But
yeah, chutzpah, I think is the exact word for that.
Chutzpah of emailing like the sitting treasury secretary and being like, hey, you want to invest in my startup? But then also that company, I'm blanking on the name, or how to pronounce it rather, Tachyon. They did receive a grant from a completely unrelated U.S. government department, the Department of Energy, a couple months later. So yeah, that was really interesting to me.
All right. Well, viewers, check out the article. It's on CoinDesk.com right now. 250 pages of FOIA retrieved documents condensed into a CoinDesk article for your viewing needs. All right. Thank you so much, Nick. That was CoinDesk Managing Editor of Global Policy Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Sign up for our tweet of the day. And this one from 17-year-old crypto investor Quant Kazi Scarf, tweeting, all eyes on Powell today. My advice, no leverage positions as of now, as either side of the market could play out here, #Bitcoin. And honestly, I scoured Twitter and the most sobering thought was from Gen Z. So there you have it. All right, that's it for First Mover. Thank you, Emily. Thank you, Lawrence, for joining us. I'm your host, Christine Lee. In the meantime, check out The Hash at noon Eastern and All That Bitcoin at 3 o'clock. CoinDesk will also be airing and live blogging Fed Chair Jerome Powell's confirmation hearing at 10 a.m. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast with Angie Lau to see what's happening in the Asia crypto markets.
Welcome to the Daily Forecast, January 11th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, Bitcoin briefly dipped below the $40,000 mark for the first time since September, Monday night, Asia time, but it bounced back quickly. Question is, can that recovery continue? We're going to take a look at the road ahead and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with some of the top stories coming out of Asia today. First up, it is official. Crypto mining is now on China's industry blacklist. The country's National Development and Reform Commission has listed the industry in the obsolete category in its guidance catalog for industrial structure adjustment. Consider that code for politically and economically canceled by the Chinese government. The catalog is used as a basis for guiding direction on domestic and foreign investment, as well as for helping government agencies in formulating fiscal and import and export policies. Now, industries in the obsolete category, which it defines as technologies which are backwards and do not have safe conditions for production or waste resources and pollute the environment, they're all prohibited from ongoing operations or seeking investments. However, a deadline for operations to cease completely has not yet been announced. Not yet, at least. Meanwhile, a new NFT collection inspired by Taiwanese superstar, singer, and actor Jay Chou has dethroned Bored Ape Yacht Club from the #1 position by trading volume on the OpenSea marketplace. Now, the 10,000 Fanta Bear series NFTs, co-created by Chow's hipster brand Fantasy, priced at 0.26 ETH or around $1,000 at the time, sold out within 40 minutes. Now, in the past 7 days, the collection's trading volume has leapt almost 500%, crossing the 17,000 ETH or $53 million mark, outrunning both Bored Ape Yacht Club and Doodles. Now, Chou definitely wasn't kidding when he said he was all about being #1, with a little help from his stans. You can find those stories and a whole lot more at forecast.news. Over in the markets, it's been a rough ride for Bitcoin so far this year. However, after dipping below the $40,000 mark overnight, it bounced back by Tuesday morning Asia time, trading at a little over $42,000. Forecast News' Lachlan Keller takes a look at the market action.
Bitcoin had been trading sideways after losing roughly 10% within 24 hours late last week before this latest dip happened. One expert told Forecast News there are multiple factors at play, with Bitcoin still being seen as a hedge against inflation, alongside headwinds from the rejections of spot Bitcoin ETFs. But he also sees a lot of potential upside because of technological developments, like the Taproot upgrade. allowing Bitcoin to start competing in the DeFi space, meaning it's more than just digital gold.
What I've seen in the early days of 2022 is just more positive signs about adoption. You've got one of the biggest neobanks in Germany adding crypto trading to its platform. This convergence of fintech around crypto becoming mainstream. More and more people will be seeing crypto, using crypto. They might be using it without necessarily knowing they're using it. It will be built into the platforms that they're using.
Miller says that while we may see more volatility ahead, 40k is not a negative level for a lot of investors who have been in the crypto space for some time, and he sees the trajectory as going up and to the right. For Forecast News, I'm Lachlan Keller.
Well, crypto assets have had quite the volatile start to the new year. Nevertheless, Bitcoin continues to reign supreme among digital currencies with a market value twice that of its nearest rival, Ethereum. Question is, will DeFi allow the OG of crypto to consolidate that position further? Well, we're going to ask David Lighton, co-founder of Lithium Finance, a platform that uses collective intelligence to price the unpriced. And he is here to give us the DeFi download. Good to see you again, David.
Good to see you, Angie. Thanks so much for having me.
Well, David, there's a lot of bear sentiment out there, and Bitcoin has had its fair share of skeptics, even as the bullish forecast for the currency, whether it's Goldman Sachs or the El Salvadorian president, are talking of a move to six figures. Do you see a network effect playing a part in that move?
First of all, I think Bitcoin will go to six-digit levels in 2022, maybe in 2023, based on its strong track record of historical exponential growth. Dan Moorhead at Pantera Capital has produced a really excellent piece of research that shows Bitcoin's log trend fitting exponential growth fairly tightly since it was created. So in principle, this ought to push the price above $100,000 sometime in 2022, or like I said, maybe in 2023. As to whether network effects play a part in that move, well, yes. Network effects occur when the value of the platform increases with each additional users. So with regard to the store of value use case, that's true fundamentally because Bitcoin has a fixed supply, right? So with each additional buyer, the supply goes down. But to the extent that these network effects increase the value of the other medium of exchange and unit of account use cases on the Bitcoin blockchain, this is also true. And I think we can look at interest in Bitcoin as to some extent crowding out investment in gold, but also crowding in investment in the digital asset space more broadly, increasing liquidity in not just Bitcoin, but all the other altcoins all the way down the food chain.
Yeah, another interesting point from the Goldman Sachs report on Bitcoin was that the currency could see an enhanced role as a store of value, taking away market share from gold over the next few years. But what do you think DeFi's role could be in this?
To the extent that Bitcoin enjoys an increased role as a store of value, there will be an increased confidence in the DeFi sector overall because Bitcoin has historically been correlated with the price of the altcoins. So to me, this is maybe the most interesting network effect, a reinforcing loop. As the demand for Bitcoin increases, the price of the altcoins also increases. And as the liquidity in altcoins increases, the builders in the DeFi ecosystem have more liquidity to use to build their projects. So the real network effect here is in the broader blockchain and digital assets ecosystem. As the value of Bitcoin increases and Bitcoin takes away market share from gold, the market power of DeFi increases and it poses a greater threat to the marketplace for traditional financial services, in my view. So obviously, we're seeing this play out on a small kind of infant scale at the moment, but I see DeFi as roughly 10 years behind Bitcoin in going mainstream. So ultimately, DeFi has at least as much to contribute to the world as Bitcoin does, based on its capability to be the kind of ultimate example of fintech and innovation in financial services by disrupting a sort of traditional centralized players. So we have to envision a world where Bitcoin goes above 100,000 and a world where people start to go to DeFi providers as their main sort of banking relationship.
Well, Bitcoin 13 years in, DeFi, you could say, is still in the toddler phase, but there's no doubt migration is happening right now and speeding up in 2022. Thanks so much, David, for the DeFi download. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.